Hello and welcome to the weekly recap of the crypto market. In February, all attempts of digital assets to break failed on the back of the upbeat macro data in the United States and the hawkish Fed expectations. These were the main driving factors for risk assets, including crypto last month. In this video, we will try to predict what next week and the entire months of March have in store for the crypto market. Also, we will tell you about the latest and the most important events in the crypto world. For instance, cyber criminals stole crypto worth $35.5 million in February, so stay tuned to learn more. Risk appetite was dampened by comments from the US Fed and the forecast that interest rates could peak at 6% at least. Naturally, that triggered market jitters. On February 24, the Personal Consumption Expenditure Price Index, a measure of the US inflation, surged by 5.4% in January, accelerating from 5.3% in December, and coming above the market forecast of 4.9%. The annual core PCE price index also surpassed expectations. The inflation data fueled hawkish concerns, which caused turbulence in the stock market and exerted pressure on other risk assets. The exchange rate of BTC also declined to its weekly lows. On a Monday, a correction across market occurred. The buyers saw a chance to offset losses and even make some profit. Therefore, the appetite for risk assets may well increase. There is also a 73% probability that the US Fed will raise interest rates by 25 basis points to 5% at the meeting on March 22. This means that the market does not believe that the American regulator would increase the pace of rate hikes. Clearly, there is some element of uncertainty. New macro data will likely clear things up. Thus, the closely watched labor market report is due on March 10, and the US inflation is scheduled for March 14. Last week was a good one for the USD index, which managed to peak at 105.35. In fact, the rally was followed by a correction. On Wednesday, the index dropped to 104.30. Yet, that had nothing to do with the fact that markets reviewed their monetary expectations. It was more of a short-term effect. Demand for risk assets grew amid upbeat macro data in China and the Eurozone, and the Aussie dollar, New Zealand's kiwi, and the euro were able to show some strength. In the United States, the Chicago PMI slowed for the sixth straight month in February, reflecting the influence of higher interest rates on the economy. In fact, there will be more macro statistics to come and affect the greenback. Overall, the situation remains the same. Persistent inflation and the tight labor market indicate that the Fed will likely keep up with the tightening. The US dollar index should break the February high of 105.35 to surpass the January peak of 105.60. Otherwise, a deeper correction may occur, meaning the highest level of the previous week will be identified as an intermediate high. All in all, the outlook for the USD index remains positive. The rally is likely to halt at around 106.40. By the close of the reporting week, BTC USD traded around $23,700, down by 5.2%. In February, the pair mainly traded neutrally, fluctuating from time to time. Its peak is seen at slightly above the $25,500 mark. The buyers are now trying to drive the pair back to this level. The $22,250 point stands as support. Should the pair drop below the barrier, we would see a bearish continuation. Ideally, the pair should consolidate above $24,000, then crypto traders may push it above the $25,250 mark. In fact, the pair tested the $24,000 level on March 1. China's rosy data dampened investors' concern about a slowdown in economic growth and boosted risk appetite. The greenback edged lower, but risk assets, including BTC, strengthened. All in all, the pair's weekly decline was not that steep. In fact, Bitcoin is getting stronger in general. Annual growth in its exchange rate is 39%. Besides, optimistic forecasts come on a regular basis now. Thus, Apple's co-founder Steve Wozniak argues that BTC will hit $100,000 per coin. In his view, the flagship cryptocurrency has enormous upside potential and it will only post gains in the upcoming years. Meanwhile, Ethereum lost 3% in a week on March 1. However, the asset strengthened along with the other risk assets, posting a daily gains of 1.1%. Ethereum's market capitalization soared by 1.1% to $1,130 billion. In a year, Ethereum added 34%. In February, the pair attempted to reach the 1,750 high. In fact, under the right circumstances, the quote could hit the target already in the short term. Anyway, investors are getting increasingly depressed due to the tense macroeconomic environment and the ongoing consolidation of the cryptocurrencies. Meanwhile, decreasing liquidity, which could trigger increased volatility and false breakouts, only fans the flames. The Fed's continued tightening to curb inflation is still the main cause for concern. There is a rather low possibility that the US Central Bank will increase rates by 50 basis points in March. The amount of crypto stolen by cyber criminal hacks in February recently became known. This cryptocurrency theft in February totaled $35.5 million, which is 10 times less than in the same month a year ago. Meanwhile, in January 2023, cyber criminals stole just $8.8 million. Last week, investments in crypto funds decreased for the third week in a row. According to CoinShares, investments in BTC and Ethereum dropped by $12 million and $200,000 respectively. The outflow of funds came due to general negative sentiment on the back of the upbeat macro results in the United States that fueled hawkish expectations about the Fed. At the same time, Bitcoin's on-chain activity of whales and addresses holding up 200 BTC slowed down. Gary Gensler, the chair of the Securities and Exchange Commission, recently shared his thoughts on the cryptocurrencies and their potential regulation. He believes that any crypto assets except Bitcoin can be considered securities. Therefore, they are subject to securities laws. Thus, it seems that crypto traders should brace for new rules. Besides, the SEC chair sees blockchain technology as a truly innovative, as it's more transparent and resistant to cyber attacks than centralized systems. Still, he is skeptical about cryptocurrencies in general and believes that they are useless from an economic point of view. Meanwhile, crypto experts disagree. Lawyers reckon that the SEC's current mandates are not intended to provide regulation for the new asset class. In fact, the United States is far behind the European Union when it comes to crypto regulation. And this has been our weekly recap of the crypto market. Stay with the InstaForex and we'll keep you updated. See you on our next video.